Tonight, we're diving into the world of artificial intelligence and the chaos when your AI starts making things up. AI hallucination is when your system invents facts, sources, or realities out of thin air, not just making mistakes but confidently misleading. This isn't a glitch, it's how large language models work. They predict plausible words, not truth. As businesses rely on AI for critical tasks, the risks escalate, from financial loss to reputational disaster. That's why we're exploring AI hallucination insurance, a new messy field trying to put a price on the chaos caused by AI fabrications. Let's meet our experts, those on the front lines of AI risk. From New York, Dr. Evelyn Reed, risk analyst for Wall Street's biggest firms. From London, Tariq Hassan, senior underwriter at Lloyd's, designing policies for AI's unpredictable chaos. From Singapore, Mei-Lin Chen, tech policy advisor guiding corporations and governments across Asia through AI's rapid evolution. Together, they'll help us untangle whether AI hallucination insurance is a real solution or just a digital security blanket. Let's start with the basics. What is AI hallucination insurance, and why is it suddenly becoming a hot topic for businesses of all sizes? As artificial intelligence becomes more deeply woven into our daily operations, the risks associated with its unpredictable behavior are growing too. Imagine relying on an AI system to generate reports, answer customer queries, or even make business decisions, only to find out later that it confidently produced false, misleading, or even damaging information. That's where AI hallucination insurance steps in.
This is a specialized type of insurance coverage designed specifically for the unique risks posed by AI-generated errors. When your AI system hallucinates, that is, when it invents facts, misleads users, or outputs content that causes harm, this insurance helps shield your business from the resulting financial fallout. That could mean covering the costs of lawsuits from clients who relied on bad information, or helping you recover from reputational damage if your brand is suddenly in the headlines for all the wrong reasons. Policies typically include coverage for legal defense fees, direct financial losses, and the costs of managing a crisis, like hiring PR experts or technical consultants to contain the damage. Some policies even help with regulatory fines or penalties if your AI's output breaks the rules. And if your business operations are disrupted, say, you have to shut down a service or recall a product because of an AI mistake, AI hallucination insurance can help cover those losses too, ensuring your company can bounce back quickly.
In a way, it's like having insurance for when your robot employee is a confident idiot, making bold claims, but sometimes getting things spectacularly wrong. As AI becomes more common in the workplace, these risks are no longer science fiction. They're real, and they're happening now.
Exactly. But here's the tricky part. Every policy is custom-built, because every business uses AI differently. Pricing these policies is a nightmare for insurers, since there's no historical data to predict how often these hallucinations will happen or how much damage they'll cause. Underwriters have to analyze your specific AI systems, your industry, and your risk tolerance to craft a policy that fits. The market for AI hallucination insurance is still very new, but the goal is clear: to protect businesses from the unpredictable, sometimes bizarre consequences of AI errors. As more companies adopt AI, this kind of coverage is likely to become a standard part of risk management.
Now that you know what AI hallucination insurance is, let's see how it actually plays out in the real world, and why it might be essential for your business's future. The Air Canada case is a perfect example of what can happen when artificial intelligence is left unchecked. It's a story that quickly became a cautionary tale for businesses everywhere, showing just how unpredictable and costly AI mistakes can be when they play out in the real world.
In early 2024, Air Canada's customer service chatbot made headlines when it invented a generous refund policy out of thin air. The chatbot confidently told a customer they could get a refund under circumstances that didn't actually exist in the airline's official policy. The customer, trusting the information, tried to claim the refund. But when the customer approached Air Canada staff expecting the promised refund, the airline refused to honor it. Instead, they blamed the chatbot, insisting that the AI had made a mistake and that the company wasn't responsible for its error. This left the customer frustrated and confused, and the situation quickly escalated. The dispute ended up before a tribunal, which ultimately ruled that Air Canada was responsible for all information presented on its website, regardless of whether it was written by a human or generated by AI. The ruling sent shockwaves through the business world, making it clear that companies can't simply blame their technology when things go wrong.
If Air Canada had invested in AI hallucination insurance, the policy could have covered not just the cost of the refund, but also the legal fees and the expenses of managing the public relations crisis that followed. This type of insurance is designed to help companies recover from the fallout of AI errors, protecting both their finances and their reputation.
The lesson here is simple but powerful. As a business, you are responsible for everything your AI says and does. No matter how advanced your technology, you can't outsource accountability. Having the right insurance in place can help you manage the risks and recover from unexpected AI blunders.
It's not just about covering the immediate financial loss. It's about safeguarding your brand's reputation and ensuring your company doesn't become the next viral example of what not to do with AI. In today's world, a single chatbot error can turn into a global news story overnight.
With the right insurance policy, a potential PR disaster can be transformed into a story of responsible innovation and proactive risk management. It shows your customers and stakeholders that you take AI risks seriously and are prepared to handle them.
But here's a twist. What if the AI making the mistake isn't even yours? The risks and responsibilities only get more complicated from there.
Wolf River Electric's nightmare began when Google's AI search results falsely claimed the company was being sued.
The result, $24 million in lost sales, caused by an AI they didn't control.
This shows your reputation is at the mercy of external AI models.
Standard AI insurance likely wouldn't cover this. It's more like reputational harm or defamation. And most policies exclude third-party digital content.
This exposes a huge gap. Businesses need protection from the entire AI ecosystem, not just their own systems.
Insurers are struggling to address this systemic risk. How do you insure against the hallucinations of global platforms?
The landscape is shifting and the risks are everywhere.
It's a wake-up call for every business.
Let's talk exclusions, the fine print that can leave you exposed.
Gross negligence is always excluded. If you deploy AI recklessly, don't expect coverage.
Systemic risk is another big exclusion. If a foundational AI model fails and thousands are affected, insurers won't cover it. Known risks and illegal acts are also excluded. If you knew your AI was flawed or used it for shady purposes, claims will be denied.
Insurance is for unforeseen accidents, not reckless or unethical behavior.
It's a partnership in risk, not a blank check.
Read your policy carefully. Most won't cover the biggest, most catastrophic failures.
Let's see why insurers are so cautious. Why is it so hard to find AI hallucination insurance? Insurers are nervous. The rapid rise of artificial intelligence has left the insurance industry scrambling to keep up. As AI systems become more powerful and unpredictable, the risks they pose are unlike anything insurers have seen before. Traditional insurance models rely on decades of data to predict losses, but with AI, there's no playbook, no reliable history to draw from. This uncertainty is making insurers deeply uneasy, and it's changing the way they approach coverage for AI-related risks.
There's no historical data for AI risks. Actuaries, who usually base their calculations on years of claims and loss records, are facing a blank slate. Without precedent, it's nearly impossible to estimate how often AI hallucinations might occur, how severe the consequences could be, or what the financial fallout might look like. This lack of data makes it extremely difficult to price policies or even decide what should be covered. Major insurers are adding exclusions, not new products, to avoid unpredictable losses. Instead of offering innovative solutions, many are simply updating their policies to specifically exclude AI-related incidents. This means that if your business suffers a loss due to an AI hallucination, you're likely on your own. The fear of catastrophic, unquantifiable losses is driving this cautious approach.
In the US, the trend is the same. Insurers here are just as wary, if not more so, about taking on AI risks. The American insurance market is known for its size and complexity, but even the biggest players are hesitant to step into this uncharted territory. Big carriers are backing away. quietly pulling back from offering coverage for AI-related losses. Many are reviewing their existing policies and tightening terms, leaving businesses with fewer options and more uncertainty. But specialized syndicates and reinsurers are piloting bespoke, expensive policies for companies with strong AI governance. These niche players are willing to experiment, but only with clients who can demonstrate robust risk controls, transparency, and a deep understanding of their own AI systems. The result? Coverage is available, but it's limited, costly, and out of reach for most.
Globally, regulation is a patchwork. The EU's AI Act, Singapore's industry-led approach, and other national frameworks all create a confusing landscape for insurers and businesses alike. Each region is taking its own path, making it even harder to design policies that work across borders. And China's state-driven rules all complicate coverage. Insurers must navigate a maze of local regulations, compliance requirements, and government oversight, which adds another layer of complexity to an already challenging problem.
A policy that works in one country might be useless in another. Multinational companies face a daunting task. They must piece together coverage from different providers, each with their own exclusions and requirements, just to protect themselves from the same risk.
Insurers want proof you're managing risk before they'll even consider coverage. They're demanding detailed documentation, risk assessments, and evidence of strong internal controls. For many businesses, meeting these requirements is a major hurdle.
The market is fragmented, and the bar for insurability is high. Only the most prepared and well-resourced companies can hope to secure meaningful coverage, and even then, it comes at a premium.
It's a complex, evolving challenge. As AI technology advances and regulations shift, insurers and businesses alike are struggling to keep pace. The future of AI insurance remains uncertain, but one thing is clear. For now, both sides are treading very carefully.
With all this uncertainty, what can your business do right now?
First, review your current insurance. Don't assume you're covered for AI incidents. Ask your broker directly.
Build a robust AI governance framework. Keep humans in the loop. Inventory all AI systems, test rigorously, and maintain audit trails. Align compliance with the strictest standards, like the EU AI Act. Appoint a dedicated AI compliance officer to monitor global regulations.
Insurers want to see proactive risk management, not just a policy request.
The more mature your governance, the more likely you'll find coverage.
It's about building a culture of responsibility.
Let's wrap up with a simple action plan. Time for your Monday morning to-do list.
Step 1. Conduct an enterprise-wide AI risk assessment. Identify where you use AI, the potential damage, and your preparedness.
Step 2. Establish a formal AI governance committee. Assign ownership, enforce oversight, and document everything. Step 3. Engage your insurance broker and legal counsel. Present your risk assessment and governance plan, and push for clarity on coverage and exclusions.
If your insurer won't cover you, ask what you need to do to become insurable, or reconsider risky AI deployments.
Make conscious, informed decisions about risk transfer and acceptance.
Don't wait for disaster. Act now to protect your business.
Because in the world of AI, the next hallucination could cost you everything.